In this video, we're going to show you how to determine why property taxes are different for apartments of the same line in the same building, but just on different floors. This also works for very similar sized apartments in the same building. If they have a large discrepancy in their property taxes, we'll show you why, and we'll show you how they're listed as such. The first thing to keep in mind is, let's take a look at this listing that this viewer had a question on. Keep in mind that New York City is generally much more loose in terms of rules around what a listing agent can advertise. For example, this property tax figure is listed as $1,043 a month. Seems pretty reasonable. Now, is this figure the property taxes before any owner-specific abatements and exemptions? We don't know. In some other parts of the country, such as the Hudson Valley, for example, Westchester, the Hudson Gateway Association of Realtors operates the HGMLS, and they are much more strict. Agents are required to put in a tax figure that is before any abatements or exemptions. But in New York City, it's much more loose and of a Wild West. So we don't know, but we can certainly verify what is going on. And this is a legitimate question because this specific viewer, or rather forum poster, had taken a look at 26E, and they had a question because this shows 1043, but if they look at 19E, which was previously listed about a month ago, it's the same layout, but the taxes are higher. It's 1289. So what is the correct answer? Is the listing agent here simply understating the taxes somehow? Well, fortunately for condos and other real property, you can actually take a look at their latest quarterly property tax bills on the New York City Department of Finance website and verify it for yourself. Obviously for co-ops this is a bit harder because co-op units do not receive individual property tax bills from the city because co-ops are not real property. In a co-op building, the co-op corporation owns the entire building, and the shareholders are tenants with a proprietary lease to occupy a specific apartment, but they're shareholders of that corporation. So in short, in a co-op building you can't do this because the co-op building receives one property tax bill for the entire building from the city. But for condos, houses, and other real property, you can go on the NYC Department of Finance website and check out the property tax bills. So let's do this and see for ourselves what's going on with this one. You can Google any number of variations of this, NYC property tax bill, BBL lookup, they all take you to the same place. Note that we put 49th Street versus 49th Street. There is no TH. If you put TH here, the system will not recognize it. Property tax bills. You can see that this is each fiscal year. New York City has a strange fiscal year where it essentially starts mid-year, so these are grouped as such. The fiscal years overlap 2 years at a time. Anyway, this is the latest property tax bill quarterly. You can take a look. And aha, this is very easy to see what's going on. So essentially this listing agent for 26E has simply divided this figure 12,513 by 12 to get a monthly figure. If you divide that by 12, you'll get 1042.75, which is 1043 approximately, which is what is listed exactly here. Now keep in mind, because New York City is quite fast and loose with rules on how listing agents must present facts and data, this may not apply to you because the actual tax before any exemptions and abatements is $15,466, but this owner is getting 2 abatements that may be specific to them. This is a very small basic star relief abatement, but the more major one is this condo co-op abatement. And this abatement is more eligible for owners who live in the property, so it's their primary residence. It's not held in an LLC, so then generally you will be eligible for this condo and co-op abatement. If you just take a look, most properties, if you're going to be assessed above 60,000, the abatement is 17.5%. So this is a pretty useful abatement, again, for people who use the property as their primary residence. Now, again, the buyer may be an investor or someone who's not going to be using it as their primary residence, so this abatement may not apply. But again, New York City, not many rules around how you list the monthly expenses and any data really, so they're using this figure. It's just something to keep in mind. So then, what the heck is going on with 19E and why is it listed as $12.89 about a month ago? Let's take a look. Oh, very interesting. You'll see that the 15,466 is exactly the same tax figure as 26E before exemptions and abatements. So they actually have the exact same property taxes. 15,466, if you look at 19E, 15,466. However, the owner in 19E did not apply or simply did not get or was not eligible for any of the abatements that the owner of 26E did. So the listing agent simply took this, we assume, and divided it by 12. Let's do this. So if we divide 15,466 by 12, you get 1288.8333, which, if you go back, is 1289 rounded up. So that is exactly what they did. So this is a great example of two units that are identical in layout, except they are 7 floors apart in the same building. They should have the same property taxes, or at least very similar. And in fact, by viewing the property tax bills for each unit online, we were able to verify that they do have the exact same property taxes before abatement and exemptions. However, the way they are presented by the listing agents varied, and this was because the listing agent of 26E used the tax figure after the owner's specific abatements and exemptions. So they were able to present a lower figure. This is why, but again, it's remember that those abatements are specific to the owner, and you might or you might not be able to be eligible for them. So this is why these two specific units have different tax figures, but they really in fact have the same. Again, we hope this is helpful. You should always do your due diligence, and you should easily be able to check this out yourself. We do have many resources on our website. Remember to check out our article on how to measure square feet for real estate in NYC. This is related and ancillary to basic due diligence, such as checking out the property tax bill. Now, as a bonus question, let's also talk about whether your property taxes will automatically increase after you buy a place. This is a relevant question because we have many buyers coming in from California where they have some sort of a homestead exemption where essentially property taxes either are frozen or rise very slowly, perhaps indexed to inflation, from the time that the owner bought it. So essentially this protects, for example, homeowners whose property values have increased dramatically as of late because of gentrification. Their property taxes wouldn't be re-rated to be substantially higher, which would make it unaffordable and kick a lot of long-time residents out of their homes. So, this essentially lets a lot of owners who have been in places for say 40, 50 years still pay very low property taxes based on a much lower assessed value than if they had just purchased it. Now, the question is, in California, if you buy a property and the owner has lived in it for say decades, the property taxes that you will pay are going to be much higher than the previous owner, because once you make that transaction and you buy the property, California is then going to since you'll assess your property at market value, and taxes are going to be a lot higher. Now, the question from this buyer is, will that happen in New York City? It's a legitimate question. They're looking at the property taxes being listed and accounting for them. What they aren't accounting for are for the taxes to suddenly increase because you have a recorded sale that is perhaps much higher than the last trade. It's a very legitimate question. To our understanding, New York currently does not have something like that. It has been discussed by lawmakers, but there is no similar homestead act like that. So this means when you buy a condo, for example, in a building, just because you buy it and perhaps the last trade for the same unit was 15 years ago, the city is not going to come in here and just automatically increase your taxes dramatically. Assessments are assessed on a year by year basis, regardless of who you are, how long you've lived in there. So it is independent of, I suppose, of whether you are a legacy owner or not. So again, that is not a factor because whether you bought it this year or whether it's the owner still living here next year, the city is going to come in and take a look and assess your property anyway. So what you do won't have too much of a factor. Of course, if you are part of a trend of rising property prices, sure, the assessments might rise anyway. But again, one person's purchase typically will not make any significant impact on what your assessment actually will be. So we hope that's answered it. Thank you so much for watching our video. If you've enjoyed our channel, please remember to subscribe for more content just like this. Please like the video, leave a comment if you have any questions. We always get back to you right away. If you have any other interesting questions like this, please don't hesitate to drop a note in our forum and someone from the community will get back to you. We hope to hear from you, and of course, if you ever need advice or guidance on the purchase process, we have a great number of very experienced partner brokers based throughout New York, in the city, Hudson Valley, Long Island. If you need any help, the advice and guidance when you buy a property is free. They can guide you through it, and not only that, they can provide you with a house and buyer closing credit, which is essentially up to 2% of the purchase price back to you at closing to buy down your mortgage rate or as a credit against your closing costs, and it's all free. So we hope to hear from you, and thank you so much for watching.